And with U.S. tariffs in effect for many countries, businesses are feeling the pressure of Washington's trade policies. Countries like the Philippines are closely watching how these will ripple through their economies. Sarah Al-Khaldi spoke with Nestor Tan, President and CEO of the Philippines' largest lender, that's BDO Unibank, and she began by asking how these tariffs could impact the bank.
There's an old saying in Wall Street, the uncertainty is worse than the bad news. Now we know the bad news, we can do away with uncertainty. So if you look at it from the Philippine perspective, exports account for only 16% of our GDP. And only 2% of that 16% goes to the US. So if you're looking at the impact on our GDP, you're looking at a few basis points. So with that kind of impact, we don't see major effect on the banking industry. But what we're also worried about is the second order impact, meaning we have exporters to other countries that will be impacted by the tariffs. That we don't know yet, the direct impact.
Yeah. What does that mean for provisions for bad loans? Are you putting aside more or less now?
Well, we don't deal too much, at least in our portfolio, with exporters.
Okay.
So far, the asset qualities have held out. So we're quite confident that we have adequate provisions for what will happen with the tariffs.
Yeah. And what are you anticipating in terms of the potential impact these U.S. tariffs will have kind of on the broader Philippine
scale
economy? Yeah.
I think generally it will create a slowdown because people will buy less as a result of higher prices. And that's a natural effect. They may also see a redirection of exports, goods and services. For example, in the Philippines, we tend to have a counter-cyclical effect. When the whole world is slowing down, we tend to get better deals from our trading partners. So you might see a redirection of the trade flows. Also, the U.S. accounts for about, if I'm not mistaken, 17% of world trade. So the 83% can still continue with the free trade that they're used to.
Economists are now expecting the economic effects of tariffs to start to show up
Yes.
in different countries. And for the financial sector in the Philippines, what are the biggest risks that you are watching closely?
I think it's a second-order impact. It will not impact us directly, like I said, other than what we anticipate to be a few basis points of our GDP, because we're not a big exporting country. But will that impact the remittances that we're getting from other countries because they now have to face inflation? Okay. Will that impact slowdown in activity in other countries, and therefore it will change the way we look at BPOs and the way we deploy people overseas? So we still have to see those effects.
So far, what is your sense for Philippine businesses? Are they borrowing more or less, spending more or less? And what's affecting those decisions right now?
Okay. If you look at the Philippine market, we have a low teens growth, which is quite good on the loan side. What we've seen is an overall balance between consumer, middle market, and large corporate. Consumer is mostly consumption, and I think partly from the pandemic, there's revenge spending. However, we're starting to see working capital and capital expenditure increasing for the middle market. That's good news because these are run by entrepreneurs. And when they start to invest, they're seeing something optimistic in the market.
Right.
And they generally drive the labor market because the middle market is our biggest employer.
Yeah. And you've reported 3% increase in earnings for the first half. Looking ahead to the rest of the year, what factors do you think will help support earnings going forward?
Okay. So far, I think we will see a continuation of the first half. The first half was strong with good balanced growth on the lending side. Low teens, good double digit across the board. So it's good balanced growth. So we expect that to continue. The fee income side, mid-teens growth, supported by client acquisition. So that we expect to continue. Asset quality stable. Now, on the cost side, we've seen a pickup in activity because of investments in productive capacity.
What are the growth factors for, the more medium term?
I think the big one would be infrastructure spending. There's a lot of companies waiting to invest in infrastructure. And we just need to have some form of stability. The second one is a pickup in real estate activity. There's a huge backlog of housing in areas outside of the Metro Manila area. So you're looking at, by some estimates, almost 10 million units by 2028. So there has to be some catching up there. So we expect that to pick up once there's some level of stability.